vex there. Put it here this side. Mm. Hello guys, what's up? How's the day going? So I'm gonna be teaching you guys how to invest in the American stock market. The objective today for us is by the end of the class, you will understand how the US stock market works. You're going to understand how the US stock market works at the end of this class, okay? And you're going to know how foreigners, doesn't matter your country, example, Nigeria, invest in US stock. Are going to understand fundamental analysis, the basics. It doesn't matter if you're a beginner or pro. You're going to learn how to pick strong companies. You're going to build a simple US stock portfolio. I'm going to teach you guys how to build a simple US stock portfolio. I repeat again, the objective today is for you to understand how the US stock market works. You know, the US market, the stock market basically globally, they are modeled almost the same way, because a lot of capital markets around the world model the US market. So if you understand how this capital market in your country, example Nigeria works, you can follow the same steps to invest in the US stock market. I also need to know how foreigners like Nigerians invest in US stock. Doesn't matter, it could be in Europe or in other parts of America, Asia. Know how foreigners invest in US stock market. You're going to understand fundamental analysis. You're going to learn how to pick strong companies, build a simple US stock portfolio. You're going to learn, I repeat again, you're going to learn how to build a simple US stock portfolio. Understanding the US stock market, stock market represents simple ownership in the company. When you own shares of a company, it means you're a part owner of that company, depending on the percentage of the shares you own in that company. If you buy shares of companies like Apple, for instance, you own a tiny part of the company. People, I know that you've learned already why companies sell shares. Companies sell shares to raise capital. Yes, if they want to raise capital, because companies always capital is money used to run the organization. Some companies also want to expand. When they want to expand their operations, they sell shares to the general public. When they companies like let's say companies like Tesla, they invest so much in innovation. So when they want to fund innovation, they want to sell shares. And this one concerns you, the investor. Why investors buy shares? Why you as an investor buy shares? There are three primary reasons why investors buy shares. One, because the money you put, the capital you put in buying the shares of the company, they will appreciate. For instance, if you bought a shares for 10 naira, your aim most time as an investor is to see that the cost of that price of that shares grow from 10 naira to 5 naira and hopefully 20 naira or um, to infinity. You just want your capital to appreciate. Then you sell it and make gain. Then some also buy for dividends. Dividends. Some companies pay dividends up to three times in a year. Some pay only once in a year. Depending on the number of units you own in that company, that will determine the number of shares of the number of the amount of dividends you're qualified for. Okay. And some bought also for long-term wealth. Some people buy shares to keep for long-term wealth. And imagine those people that bought shares of First Bank. Those are papas that bought shares of First Bank many, many generations ago. Today, some of their children are smiling, or some of them are smiling even at old age because their capital has appreciated. They've been receiving dividends. I imagine some of them reinvesting those dividends over the years. You can imagine some of them are multi-millionaires now, if not dependent number of units, but some of them are also possibly billionaires by now. Imagine somebody that owns 100,000 units of First Bank. Maybe he bought it at 50 kobo, many, let's say 30 years ago. And what's the current selling price of First Bank today? We can search to see. So that's long-term wealth. So you too can buy shares of company and keep it for a long time, and your children can inherit it, or you can for your retirement. But and that's what we're learning this course, so that you can plan your life very, very well. You're planning the future so that in your retirement you're not going to be a liability to your children or grandchildren. Instead, you'll be traveling around the world, enjoying the fruit of your labor. And that's what we want to get to. So major US stock exchanges, there's you need to understand that the US stock exchange is not just one. We have the New York Stock Exchange, the largest exchange in the world. The US stock exchange is the largest stock exchange in the world. Companies like Coca-Cola of this world, Walmart, JP Morgan, they are listed there. Then we have the NASDAQ. The NASDAQ mostly is about the technology, heavy exchange. Companies like Apple, Microsoft, Tesla, Amazon, those are the NASDAQ. Then I'm just going to teach you guys so that you understand key US market indices, indexes. We have the S&P 500. S&P 500, just the top 500 companies in America. Whenever you hear the S&P 500, these are the top 500 companies in America. The Nasdaq, there are 100 largest technology companies. Then you also going to know about the Dow Jones. The Dow Jones. These are 30 major blue chip companies in America. The 30 major blue chips, they are classified as the Dow Jones. These indexes measure the health of the U.S. economy. Practically they measure the health of the U.S. economy. Then you may ask, why invest in the U.S. stock? Why should I invest in the U.S. stock market? Basically, you're investing in the U.S. stock market for dollar exposure. You want to protect investors from local currency depreciation. Local currency depreciation in the sense that 8 years ago, or more than 8 years ago, let's say 10 years ago, when Buhari came in as the president of Nigeria, that was great. The naira was devalued. The naira depreciated. I think when Buhari came in, the naira was exchanging for below 200 naira to dollar, below 200 naira. It went to almost 400. Then when Tinubu came in, naira was exchanging. It went as high as I think 17. I don't remember the exact amount naira to dollar was exchanging. But right now I think it's exchanging around 1 4, between 1 4 and 1 5. So imagine you had your dollar investment 10 years ago. Your money was in dollars. When the naira was depreciating, you'll be smiling to the bank because you you have protected your investment from local currency depreciation. If the naira weakens, your dollar investment increases in value. That's just simple what I'm trying to say. As the naira is getting weaker, your if you have investment in dollars, your investment is going to increase. Even if you have investment, let's say invest $1,000 in 2014 or thereabout, that your investment was in dollars. Imagine you had up to $10,000 in investment. Aside from the capital, your capital appreciation, the dividends you are receiving, and all the things I've listed before now, you also have, you have already protected your money, your money against the weak naira. Imagine you have 2 years ago you have $10,000, or let me possibly, if you make good investment, um, in 2013, 2014. Or if you invest in good companies, you should expect that your investment will have appreciated, sometimes maybe double or at least 50%. So you were talking of maybe you're having $15,000 in your US portfolio, and even if it's $5,000, you exchange it, decided to withdraw it. you know um you can just imagine how much money you will have made. Why invest in the US company? No, the companies are very strong. They have strong companies in America. Companies like Apple. By the time I start analyzing these companies, you know why I'm saying that. Strong companies, example, Apple, Microsoft, Nvidia. We all know what happened to Nvidia last year. How their stock market appreciated rapidly. No one saw it coming, but Nvidia appreciated so well. Okay, so the US market has strong companies. They have companies like Amazon, Google. These are companies that almost all of us make use of Google. A lot of people, even my children, tab, we got it from Amazon. So these are global companies. Apple, almost everyone around the world uses Apple phone, one Apple gadget, one Apple laptop, one Apple computer, or Apple wristwatches. So number two reason why you invest in the US capital market is they have strong companies. These companies dominate globally. They're global companies that dominate globally. Then number three reason is they they invest so much in innovation. The US market invests so much in innovation. US leads they lead in almost they are leading in almost everything. I think their biggest competitor, their biggest people closest to them now are the Chinese people. But the US still leads in artificial intelligence and technology, healthcare, aer- aerospace. You know, the US leads in all these. The US leads in artificial intelligence. When you talk of artificial intelligence, you're talking of is it ChatGPT? You're talking of Gemini. You're talking of Grok, the one that Elon Musk is introducing. Almost all of us they will make use of artificial intelligence, ChatGPT. In fact, when you want to write something, even when you want to write a reply, some people today even want to reply a common text. They use AI to help them write, correct themselves. So you see, they are leading in artificial intelligence. Even in terms of security today, they apply artificial intelligence. They are also leading in technology. I don't think there's any country in the world that comes close to the US in terms of technology. In terms of healthcare, I was watching the video of Bishop T.D. Jakes. Most of us are familiar, will know who Pastor T.D. Jakes is. Bishop T.D. Jakes. I think last year he had a heart attack on stage. Where he had to drop the microphone. They had to rush him to the hospital. He was sharing how they use artificial intelligence to trace, the cause of his sickness, and they were able to use artificial intelligence to treat him, and he was looking healthy. Of course, Bishop Jake's already an old man. Then, so that's where what artificial intelligence and in healthcare also. You apply artificial intelligence to healthcare. In healthcare, the US is leading. In aerospace, you all know the Boeing, all those most airlines are manufactured in America. The number four reason why you should invest in the US stock is historical returns. The average annual return of the S&P 500 is above 10% per year, and they've been doing it for over 100 years. The S&P 500, these are companies that have been in existence, some of them over 100 years. That means if you invest $10,000, could grow up to $170,000 in 30 years. In 30 years, imagine, you just keep your $10,000. Like I said earlier, it depends on why you are investing your money. It grows over $170,000 in 30 years. That is huge. Then, how Nigerians can invest. Come here, You may ask yourself, how can I invest in the in the American market as a Nigerian? We have the popular apps that we use in Nigeria. Number one app that people use in Nigeria, in my opinion, is Bamboo, an app called Bamboo. I'm going to, as the class proceeds, I'm going to demonstrate to you guys how to use Bamboo. It's very popular in Nigeria. Then there's another, number two is Trove. People also use Trove. It allows US stocks trading, even from Nigeria. Then the Rise Vest too is very good portfolio investing. If you're a portfolio investor, look out for Rise Vest. Rise Vest, RISEVEST, Rise Vest. Then another one is Interactive Brokers, professional globally. I'm going to take you guys steps to start. You open your brokerage account with them, then you're going to verify. I don't know if I should go now, but let me go. They are going to fund your account with USD. They are going to buy stocks. You know, types of stocks to invest. You know, types of stocks to invest. There's something we call the growth stocks. Companies growing rapidly. There are a lot of companies growing rapidly in the American capital market. Example, Nvidia. You know, um, as I mentioned earlier, that Nvidia experienced a rapid, capital increase from the capital market last year. Nobody saw it coming, but if you as an investor, good investors who are analyzing capital market should have seen it coming. We expect our students to be able to kind of be able to know these things before it becomes popular, before any stock become popular. We expect you watching me be able to, and that's what we're going to. I'm going to get there to teach you guys how you're going to position yourself. Before the public knows it, before the public starts celebrating, so that you be the pace setter. Another company growing rapidly is Tesla. I think Tesla was started 2020, 2003 or thereabout, and now it's a global leader in electric vehicle. Then Amazon also growing rapidly. You know, um, then those are the companies, growth stocks. We call them growth stocks. Then there are other companies. They 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 are the risk is high, but the return is also high. Another companies people look at for are dividend stocks, companies that pay dividends. Example, Coca-Cola. Coca-Cola pays dividends regularly. Then Johnson and Johnson, then P&G, that's and Procter and Gamble. They pay dividends. These are dividend paying stock. They are good for passive income. If you're looking for passive income, these are the stocks you go for. Then they also have the value stocks, stocks, value stocks. These are undervalued companies. These are companies that are undervalued. A lot of companies are undervalued. It's left for you to do your due diligence and ask yourself which companies are undervalued. Then you go there, you put in your money, in those undervalued companies. Example, bank stocks or industrial companies. Example, bank stocks or industrial companies. Then understanding the fundamental analysis. This is very, very key. Most of you will have known little about fundamental analysis. This is the most important section. Fundamental analysis means studying the company's financial strength before investing. When you start studying uh, company's financial strength before you start investing, financial metrics, key financial metrics, revenue, total money the company makes. Revenue is the total money the company makes. We call them total gross earning. You can call it total revenue or the gross earning, how much money the company makes, before you start deducting your expenses, what cost of, sales, what did you, how did you don't just get money, there must be costs. Example, uh, big companies like Apple, they make revenue of up to 383 billion per annum. Then you gotta look at the when you're doing a financial analysis, you also can look at the net income, profit after expense. Net income simply means profit after deduction of expenses. Like I said earlier, when you have revenue, there must be something that you do to earn that revenue. There are costs to that revenue, profit after expenses. Higher profit equals to higher or stronger company. A company with high profit, it shows you that that company is a strong company. A company that does not make profit tells you that that company is a weak company. Another thing to look out for is earning per share. you know um Profit divided by the number of shares. Simply, earnings per share is simply profit divided by the numbers of shares. Higher earning per share usually means stronger performance. When a company has a higher earning per share, it means the company is a very strong company. Another thing for you to look at is the earning per share ratio, price to earnings. The formula is simply price per earning equals to stock price divided by the earning per share. Earning per share ratio is equals to stock price divided by the earning per share. Example: if a stock price is $100, the earning per share will be equals to $5, because earning per share equals to $5. Then just divide 100 by 5. Stock price $100, then earning per share equals to $5. Then the earning per share ratio equals to $20, because if you divide 100 divide by 5, you're going to get 20. So lower PE means the stock is undervalued. The stock is what? Undervalued. Another thing for you to look at when you are doing fundamental analysis, look at the debt levels. Too much debt is dangerous for any company. Strong companies have manageable debt. Strong companies have manageable debt. Yeah. Uh, then return on equity. There's something again to look at when you're doing your fundamental analysis. Return on equity. It measures how well a company uses investor money. It measures how well investor company uses investors' money. Good return on earnings should be between 15 to 20%. So this is the part that's going to interest you more. How to analyze a stock. Example, Apple. Let me open. I'm going to open my trading view and share with you guys. But let me continue first. Question to ask yourself: is revenue growing? Very, very important when you're analyzing a company. If you pick a company like Apple or Amazon, you ask yourself this important question: is the revenue growing? Is profit increasing? Okay? Is profit increasing? Does the company dominate its industry? Is revenue growing? Ideally, if a company makes um, $10,000 in revenue this year, and next year the company makes $15,000, then you know that the revenue of that company is growing. But once the company makes $10,000 this year, next year $5,000, and the year after, let's say $3,000, you now know that this company is not growing in revenue. Is profit increasing? Same principle. If a company makes a profit of $1,000 this year, and next year makes a profit of $2,000, you're going to tell us, oh, the profit of this company is what? Increasing. But whereby a company um, makes a profit of $1,000 this year, and next year makes a profit of $5, you're going to tell yourself that this company is not making the profit of this company is not what is not increasing. The company profit is supposed to ideally be increasing year in, year out. And those are the measures to look out for when you're analyzing companies. Does the company dominate its industry? Pick a company, for example, like Coca-Cola. In the beverage company, you can see that Coca-Cola is dominating that industry. If you go to the smartphones, everybody knows that Apple dominates that industry. And I think their close competitor will be maybe Samsung. We can see that those companies really, really dominate there. If you go to the electric vehicle, you now look at those companies that are under electric vehicle. You now look at which companies dominate that industry. You know, you just look at that. If you even the pharmaceutical, you ask yourself which company dominates that industry. Then you look at those are the companies you should look at for and stake your money. Yeah, does it have strong leadership? Leadership is key to every organization. Leadership is key. Everything John Maxwell is the one that said everything rises and falls on leadership. Does it have competitive advantage? Ask yourself all these questions before you invest in any company. Competitive advantage is also called economic mode. Example, Apple, brand plus ecosystem. If you talk of Amazon, logistics dominance. They dominate the logistic sector industry. No, I don't think any company, maybe Alibaba or something, but I don't think any company comes close to uh, Amazon when it comes to logistics. Then Microsoft, everybody knows, almost all of us, almost everybody around the world. If you have a computer, you're making use of one Microsoft software or the other. Enterprise software, they dominate the software industry. We're going to talk about building a simple portfolio. You should be able to know how to pick any random stock by now. After this class, um, and 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 analyze and take your money. Example, let me teach you guys as a beginner. You can tell yourself, okay, I want to stake 40% in the S&P 500 in their ETF. I want to stake 30% in the Big Ten. Maybe you have, say you have $1,000 that you want to invest. You now put $400 in the S&P 500, then maybe $300 in the big tech. I already told you guys what the big tech is. Then $20,000 to the dividend paying stock. Then $10,000 in high growth stocks. You're going to spray your money like that. S&P 500, example, the Apple, Microsoft, Visa, Nvidia. I've told you guys that earlier already. Then don't forget, I'm an accountant, a financial person. The One of the things they keep telling us that we must always consider risks. Nothing is risk free in this life. It's either the risk is high, minimal, but I don't think anything in this life is risk free. So risk management is very, very key. The rules every investor must follow. Rule one: never invest money you need soon. Never you invest money that you need soon. Never you invest your children's school fees in the capital market, your house rent, food money, feeding money, or school fees, or something you need very urgent, or something you need to send to your parents or your children for their upkeep. Do not invest money you will need very, very soon. Rule number two: diversify. Never put everything in one stock. Never put everything in one stock. Then think long term. Always, like I give you guys example, investing $10,000 with 10% annual return in 30 years. I told you guys earlier, your money will have grown to $170,000. Never put everything in one stock and think long term. Rule number three: best investors hold over 10 plus years. You keep your investment for over 10 years. Then rule number four: avoid hype. you know Avoid hype. If social media is shouting about a stock, it may already be expensive. If social media is shouting about a stock, I'm telling you guys, it may already be very, very expensive. These are the common mistakes investors make. Mistake number one: day trading without knowledge. Day trading without knowledge. When you trade without the knowledge, traders, like I told you guys, traders are those who are they're emotional investors. So day trading, you need high knowledge if you want to be a trader. You need to understand the high knowledge. You need to have high knowledge of the capital market. Then another common mistakes people make is buying penny stocks. Most penny stocks fail, but if you are lucky, you can also have high return. But buying penny stocks is another mistake people make. Then mistake number three people make is that they follow hype. They follow hype. when they are hyping a stock, you know, you want to put in your money because people are hyping that stock. Ooh, people are talking about Apple, you run for it. People are talking about Tesla, you go for it. People are talking about Coca-Cola, you go for it. You know, people are talking about Nvidia, you go for it. Following hype is a mistake. You know, another mistake is selling during market crash. When market crash, you know, a lot of people will start selling. Oh, the market is crashing. Smart investors buy during crashes. When the market is crashing, that's when smart investors put in their money. Smart investors put in their money when market is crashing. And will you I want to ask you guys, will you invest in revenue growth? Now, will you invest in a company, this company, when the revenue growth is at 15%? When a company is growing at 15%, will you invest in it? When the profit margin is 25%, will you invest in that company? When the debt is low, will you invest in that company? When that company is a market leader, will you invest in that company? Yeah, this is probably a strong company, no doubt about it. Yeah, so you should follow this formula when you are investing. Good industry, strong company, growing revenue, reasonable valuation, long-term holding equals to success. Think like a business owner, not a gambler. Think like a what? A business owner and not a gambler. When you buy a stock, you are buying a company, you are buying a management team, you are buying a future stream of income. You are buying a future stream of income. So right now, I'm going to pick one stock and I'm going to demonstrate to you guys. Okay, I'm going to pick Apple. I'm going to be sharing my screen to show you guys. Okay, let's do this. Okay, okay, this is my, no, 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 not this, sorry. This is not what I want to share with you guys. Let me do this. This is trade view. Yes, trade view. Let me share my screen. Okay, can you see my screen? Okay, so this is, go to trade view and watch. I'm gonna pick, this is Apple. So I'm gonna pick this. So this is the S&P 500, right? We're going to pick one stock and try to analyze it. Well, let me pick Tesla then. Okay, Tesla. Let's, okay. So this is it. Can you guys see my screen? I hope you guys can see my screen. Yes, I'm picking Tesla. They're going to see this is the chart. This is a chart. This is how much Tesla is trading today. The opening price was three 391.20 dollars. Then it grew today to 394.5. Okay. Then last updated on March, this is when it was last updated, March 14. Today is 16. You know, but this one was last updated today, you know, 10:37 GMT plus one. So we're going to just scroll down and look at the charts for Tesla. Okay, there's a news about them here. Key facts today: Tesla and Serra extended deadline to June 1st, 2026 over alleged default on Vidalia are not material deliveries. Contract covers 8,000 whatever per year for 4 years to supply non-Chinese EV battery graphite. So this is the news about Tesla right now. Okay, so you can read more about that. Then upcoming reports of Tesla next report date is April 2028. Report period Q1 2026. April 28th, 2026. That's report period is Q1 2026. You know that earning per share estimated is 0.41 USD. Revenue estimated is 23.00 billion USD. Let's look at the key stats. The market capitalization for this company is 1.47 trillion USD. You know, they that is to tell that this company is the economy. This company alone can buy the economy of Nigeria like 3 times, because the last time I checked, our GDP was, I think there was debate during Lord Jonathan. They were saying that our GDP is 500 billion dollars, but this company, their capitalization is up to 1.47 trillion dollars. That is a huge company. So this company, I guess, is worth investing. Dividend yield, you can see here dividend yield, because you know why? Because Tesla does not pay dividends. Tesla does not pay dividends. They don't pay dividends because they believe that your stock price will appreciate in value. The price to earning ratio is 367.11. Then basic earning per share, is 1.18 USD. Okay, then net income. Net income, it's that means this company spend a lot, their cost of sales aside, for them to make. No. Okay, I don't know. Okay, net income is 3.79 billion, the total revenue. But still yet, I think that means they spend a lot. If you make 94.83 billion, then your net income is 3.79 billion. It shows that this company spends a lot in their cost of sales. Shares float is 2.69 billion, and then the beta is 1.46. These are the things you need to know as an investor before you put in your money into any company. These are the fundamentals you need to know. Then employees, they have large employees, over 134,000 employees. Revenue per employee, that's huge. That means they have great employees. It's 703.54 thousand. Their net income per employee is 28.18 thousand, 15,000. Let's learn about Tesla. About Tesla Incorporation sector, consumer durables, their CEO. We are learning about leadership also. Then the industry is motor vehicles. That's the industry. They're operating. Their CEO is called. That's when we're doing this because of leadership. Elon Reeve Musk. Then their website is tesla.com. Where is their headquarters? Their headquarters is located in Houston. This company, I told you guys earlier, was founded in 2003. Their IPO, when they become public, when they first, IPO means initial public offer. Before a company is listed, they do what they call initial public offer. It was listed in 2010. These are all the things you need to know about a company before you put in your money. Okay, so let's look at their financials. Everything has been made easy for us here. Their financials, performance. We always say you should compare the previous year with this current year, right? So performance, they have their Q4 2024. This is their revenue. It was come here. This is their revenue. It was $24 billion. Then their Q1, you trace this line. Okay, Q1 2025, it dropped to $16. Okay, then their Q2 2025, it's still $24 billion. Then Q3 2025, it was 30, I think a little bit over. If you put this line here, it's not up to 33, 32 billion. So it's around 30 billion if you draw this line. Okay, so their Q4, it dropped to 24 billion. Okay, these are their net income. So we're doing that. This is their 2025 report. Debt level, you check in their debt level coverage. Okay, debt level coverage, that means the debt of the company. You can go on and on. We can pick another company to do this analysis. These are called what I'm doing right now is called fundamental what analysis. We can go and you want to read about them, see the news about them just 10 hours ago. You can click about them. Australia, Sarah, Tesla extended deadline to resolve a large default in graphite supply. It's very good for you to follow the news as an investor. So I'm going to stop here for today. So basically, then if you want to invest in the stock market, the US stock market, I said earlier, use apps like Bamboo, Trove. All those apps are good for you. You can always use those apps to invest. And that is a simple analysis we did about this company. So I'll stop sharing. Thank you guys. I hope you start investing like a pro. Thank you so much for listening. God bless you. See you some other time.